Okay, well, thanks everyone for being here today. We're recording this, so for those that are watching online, my name is Carl Bishop. I'm the broker and owner of AE Realty, and I'm excited today because we're doing a 1-hour course, CE course, and talk about down payment assistance. We recently partnered up with Expedient Mortgage, and I was excited for this partnership. I've known Richard for years. This is Richard Murray with Expedient Mortgage. There's many reasons that we decided to partner up, but one of them was because of their ability to do down payment assistance, and their accessibility to all the different down payment assistance programs. And so I'm excited for this course. And, Richard's going to drop a lot of great information on us. And it's going to be available on YouTube, so maybe you missed a portion, you can come back and watch it at a later time. So Richard, I'll let you go from here and tell us all about it. Thank you, my friend.
All right. Thank you, Carl.
All right.
Yeah. Thank you, guys. It's an honor to be here. We want to share about the home buying program. This is also a CE credit for realtors who would like to receive a CE credit. We're going to pass around this piece of paper. If y'all could put y'all's name and license number on here, pass it around. And for those of you that are on a Zoom call, if you could email it over to richard@expedientmortgage.com, richard@expedientmortgage.com, and we will make sure that you guys get your 1-hour CE credit. All right, so who wants to help more home buyers get into houses for 2021? Yes, yep. Yeah, we've seen a lot of volume increases with realtors we've been working with and clients that were able to purchase a home that would have normally had to wait for down payment money. Just had a call yesterday where someone, a past customer had called me and said, well, they're in the middle of a transaction. Their lender is telling them that they need $12,000 to close on a house. With the down payment assistance program, we had factored that they would need a whole lot less, probably in the $4,000 to $5,000 price range. So there's a really good amount of down payment out there. So as far as the, this is the course number right here. It's a 1-hour CE credit. Okay, so we're going to talk a little bit about the myths for down payment. It used to be that the rates were higher on the down payment assistance program. So whatever the market rate was, if the market rate was 2.875, the down payment assistance was 3.875. So typically, you have buyers that were reluctant, or that higher interest rate kind of, maybe they were not interested in the program. But now the program is to where the rates are competitive with market rates. So the down payment is, and I'm going to show you the down payment assistance rates on the next page, and it's going to show they're very, very low rates, very competitive. The other myth is, first-time home buyers. They don't have to be a first-time home buyer. This can be for someone that has purchased a home and is selling a home, so there's not a 3-year waiting requirement. It can be someone that is selling a home right away. Maybe they're doing a double closing and moving straight into the next house. So that's really helped out a lot of home buyers. And the income. So this is an FHA loan with the T-Shack. So I know there's city programs out there with down payment assistance as far as HIP or different programs like that. They're going to have lower income requirements. They're going to have other requirements as well. This one is simply an FHA loan with the T-Shack. So it's very simple. So anyone that's had some experiences in the past, maybe the down payment assistance program was very difficult or hard to get through. Maybe it was a city program. This is simply not the case. I mean, it's a 30-day close. We can close in 30 days or less. It's market interest rates. The requirements are, 620 credit score, income limits of $97,000, and home price limits of $350,000. So one of the myths is, it's for a certain price range, lower price ranges, lower income ranges. So with those higher ranges, we have people purchasing, the $150,000 price range, but $200,000, $250,000, $300,000 price range. It really adds up. And I think a lot of the clients that are in the 250 to 300 range, they think this program is not for them. Maybe they already have some down payment money, or maybe they're going to cash out from 401k. They don't have to do that. They don't have to liquidate all their savings. They can keep some money in the bank and be able to still do the program. So a lot of people think that maybe this program, that they don't qualify or they make too much, but with that 97,000 income limit, it really helps. If one spouse is making 97 or less, and the other spouse is making 50, 60,000, if they qualify, it's on qualifying income. So if they qualify on that one spouse's income, then they're within the income limits. So that's a really good thing. So credit.
In that same sense, sorry.
Uh-huh.
Would you then be able to separate their bills, like their debt?
Oh, we do have to, because it does fall within the FHA guidelines, so we'd have to bring in both debts. Yeah. Great question. Yeah.
Only using one income.
Yes, only use it. Yeah, so the one income would have to qualify for the joint debts of both spouses.
That the other one doesn't have, you still have to count that?
Yes. Yeah. So if they have separate debt, we have to count that debt too.
So have to count that, okay.
Yeah. Because that's a guideline of like a regular FHA loan, and then we're adding TSHAC to that. So if we're not using, both income, we're just using the one income, then we have to count both debts. Yeah.
What's TSHAC?
Oh, Texas Affordable. Yeah. Say that again, Philip.
Texas State Affordable Housing.
Yeah, very good. So location-wise, so with the city programs, sometimes it's just certain areas within the city, closer to the downtown areas, but this program, FHA with the TSHAC, is statewide, so there's no limitations on areas or locations. It works in all areas. So, and the other thing is this TSHAC originally started off with kind of like the HEROES program, the teachers, firefighters, police officers, and they still have that program within the TSHAC, but they've opened it up to all job professions. And so that's where, yeah, it is really nice. So it's a wonderful program.
Only the first responders, they get benefits.
Oh yeah,
A lot of people like, well, I'm not a firefighter
Yeah.
or a police officer. I'm like, you don't have to be. They're like,
Yes,
okay.
exactly.
Like years ago when I started, it was some of the loans. It was only for first responders.
Yep, exactly. Yep. So it's really nice that they've opened it up to everyone. And you'll find that once you start closing these programs, your referral business is going to skyrocket because, what are they going to say to their friends, their family, their coworkers? My realtor just got me this house and they got me $8,000 in down payment assistance. And you're just going to pick up a lot of referral business. It's good for the home buyers because they're buying houses now. They don't have to wait to save up that money. So literally anyone that qualifies for an FHA loan, 620 credit score, 97,000 income, up to 350 price range. And that's just a recap. The rates are low. We've seen the rates as 2.875, 3% range. It changes weekly, and so very competitive rates. Down to 620 credit scores, available everywhere in Texas, 97,000 income limit. And the reason why is, just talk to the clients because sometimes people will put it on hold because they just really don't want to liquidate their savings. It's available for the 250, the 300 price range. Anybody that's doing an FHA loan, why not get that grant money?
For some reason, most of my clients, they don't have money for down payment. Just
Yeah.
simple as that. They're like, no, I don't have the money.
Yeah.
I have to wait a year and
Yeah.
save the money.
Yeah.
Talk to my wife, blah blah blah. I'm
Yeah.
like, okay.
Yeah, exactly.
Sometimes that stops them from
Yeah.
buying a house.
Yeah, definitely.
Richard.
Yes.
The other day, Ben and I were talking to a client, and she said it's too good to be true. Like, where does that
Yes.
money coming from?
Right.
It's like it sounds to me. Matter of fact, she even hung up on Ben.
Yeah. Yeah.
She says it
Yeah.
sounds like a scam. She hung up.
Right. Yeah.
Because she was like too good to be true. So like, what's the best way to explain it to people? Like, no, it's not to get the truth. Like, the money is, I like to say, hey, it's given because the government's like taxpayers, and when you're a homeowner, you're paying taxes, and that's why they do it. But what would be a good way to communicate that to people?
Definitely. That's a great question. We do have a link to the website, to the TSHAC website. I mean, it's going to show all the details. It's a very extensive website, so they can check. In fact, we sent that client the link as well. So I'm sure she thoroughly checked out that website.
Yeah.
So, I mean, she's actually looking for a house right now. So it is working. Yeah. So, but yeah, that's a great question. And it is, it does, even we're doing these loans every day, and it seems like this is too good to be true. But it works, it really does work. And it's through the state of Texas, so, and we give them the link. Yeah. So on this part, back in May, TSHAC did an overlay. So really, the only major overlay on this whole product is it's a 45 debt ratio for FHA loans up to a 699 credit score. Okay, so FHA normally we can go up to 55 debt ratios. So if they have a 700 score, they can get up to a 55 debt ratio. So really it's that 45 debt ratio. Some people are coming in right at a 40, 47 or 48. There's some additional TSHAC there's several TSHAC programs. There's another program. See, this one is they don't have to pay it back. Okay, so that's the 45 debt ratio, up to 699 credit score, 700 credit score or higher is going to be up to a 55 debt ratio. And so, but there's other TSHAC programs. There's like that we can get up to a 50 debt ratio. They have to stay in the house for 3 years, and if they sell it before the 3 years, they have to pay it back. Okay, so there's different programs. We always start with the one that's forgivable from day one, and they're able and not have to pay it back. But if we need to go up higher in the debt ratio, then we'll do that as well.
What's the maximum PTI you can get on that FHA?
55.
55.
Yeah. So yeah, I mean, selling more homes. I mean, we've seen realtors double, triple their production from this program for this year. A lot of lenders are not offering this program. They're not promoting the program. We are. We love to see home buyers get into their houses. It's just a really good program. So yeah, like I said before, we have many situations where we're talking to a client and they're approved on credit, they're approved on debt ratio, and then it comes down to, well, I'm not going to have money until May or June of, down the road. This program is able to help people right now. So it gets exciting because they're able to do something and not have to wait.
I have a question.
Yes.
Do you have anything that we might be able to share via social media?
Yes, that's a very good question. We actually,
No?
oh yes, that's a great question. We actually will co-brand a landing page that has the details of the down payment assistance. Click here to see if you qualify for down payment assistance. And so through that landing page, we'll build it. It's co-branded. It'll have your information on it. And when they click that link, you'll get an email notification, and then I'll get an email notification that they've applied, and so we can follow up with them. And so that's a specific link that has your name at the end of the link, and then you can promote that, and it's able to track the leads as well.
That's great. Who do we need to contact to get
Oh,
that done?
yeah, just email me at richard@expedientmortgage.com. I just need your headshot because we're going to put your photo on the landing page. Yeah, great question. Oh, and that was the last one right here. The third markdown was the co-branded landing pages. Yeah. And I designed this. I went to a lot of marketing conventions. I said, you know what? Let's bridge that gap, right? Because, what's the next step in home buying? They call the realtor, and it's like, we need to get pre-approved. And it's like, let's bridge that gap of being able to track these leads and make sure that it's not just a general apply link, so that you guys are notified when they're applying. And so if they don't finish the application, we'll be able to follow up with them, so because they're asking for name and number, and then they click the button, and then it takes them to the full-blown application. So we're getting their name and number before they start the application. So if they're applying, then we'll know who referred it in, and then we can get back to you guys right away. If they don't apply, then we can both be following up with them, seeing if they have any additional questions. Yeah.
I have a quick question.
Sure.
Paragraph 12, what does it mean by strong offers with zero in paragraph 12?
Seller contribution.
Yes.
Seller plays
Yeah.
closing costs.
Yeah.
But there's still closing costs, right?
Yes, so there's still closing costs. And so, on FHA, you have 3.5% down payment. On the down payment assistance, they can pick the 3%, the 4%, or the 5% option. So if they're in a competitive situation, not able to get paragraph 12 contributions, the client might be picking that 5% option. The rate's typically a 0.5% higher. But, if they don't have the money, and that's we look at the payment and say, are they comfortable with that? And they're getting the 5% assistance, then that leaves 1.5% left over that they can apply towards closing costs. So in that situation, if you can't get money in paragraph 12 and they pick the 5% option, then they put up their 1% earnest money, and then they are able to get the 5% assistance. 1.5% is left over after the down payment to cover closing costs, and then usually we get to the table and it's very little at the closing table. If they're able to get some seller contributions, then they'll pick the 3 or the 4% option, which will give them a little bit lower interest rate. So it just depends on the property and how competitive your situation is. It is nice to go in with really strong offers. I mean, we have very low inventory, so what kind of experiences you all having with that price range of $250 or less is very, very competitive?
Yeah.
Closing costs paid.
Yeah.
Any home that is reasonably priced in a decent area under 250, good luck getting a closing cost.
You get a
Yeah.
contract, you said.
You can't.
Yeah. Yeah,
So if you ask for anything in paragraph 12, I mean, you're pretty much out of consideration.
right, yeah,
And even if you go over list price, what do we have big problems with now is appraisals.
yeah,
So a lot of people say, well, just try to go 5,000 over and ask for a couple grand closing costs. From the listing standpoint, it's like, no, because yeah, it's more money, but it's not going to appraise because there's no comps for it.
right,
So, that's why this is really,
Yeah.
really strong for most people in that 200, 250 and under range.
yeah.
So how do you go about requesting the 5% for the buyer?
Oh, so we'll give the buyer the choice. I mean, we'll show them 3%, 4%, and the 5% option. The rates are going to be a little different between each option. And then we'll show them their cash to close and said, this is what your cash to close is going to be. And based on their liquidity, how much money they have, they're kind of going to decide what they feel comfortable with. They may pick that 5% option because they just have earnest money and maybe just $1,000 at the closing table. Or they do have a little extra, but they want that little bit lower rate, and they'll pick the 4% option, and they'll put up the earnest money plus maybe $2,000 or $3,000 at the closing table. So the big thing is that people are not having to put $12,000, $14,000 down on a house. It saves them a lot of money. 5% on that $200,000 is $10,000. Yeah, that's a lot of money. They don't have to pay back. Yeah, yeah.
And Richard, what's the difference between that and Seth and Seth Gold Star? Because I've heard a lot about that too. Do they do similar programs?
Yeah, it's pretty similar, and we've done Seth before as well.
Okay.
T-Shack is the one that we do a lot of, and the rates are very good. So, yeah.
It's also a state program, right? Seth
Yeah.
is a state.
Yeah, state program as well. So, the neat thing is when you're writing up your contracts, it looks just like a regular FHA contract. So there's really nothing special that you need to put in your real estate contracts. It's just like writing a standard FHA. And, the down payment assistance is considered a gift or grant. So it'd be no different than someone getting a gift from a family member. That's not something that we will put in a real estate contract. They're just getting the gift or grant from the T-Shack So it's just a different source of where the money's coming from. Yeah. So anybody get this? Yeah. Yeah. Yeah, all the time. So we talk about down payment assistance, and it really is helping people get in for a lot less money. We've had people get in for $2,000, $3,000, $4,000 total, on a house. But it still has to qualify FHA, a regular program. One of the biggest issues in our industry right now is people still depositing cash, or they're moving a bunch of money around. So that still comes into play because we still have to verify their earnest money that they're putting up, the 1%, maybe $2,500. That has to be verified, okay? And we still have to verify their money at the closing table if they're bringing some money there. So even though it sounds, it's still going to apply regular FHA. So basically, they still have to qualify based on regular FHA. So that right there, bank statements can be one of the biggest issues with any loan, whether it's an FHA with a down payment assistance or a VA or conventional. It's still the number one issue is bank statements, deposits going in and so forth. So, yeah.
I'm laughing because me as a Hispanic, Mexican culture, it's really funny because a lot of my clients, they're like, why have 50,000 cash in my house so I can put it down in the house? And I'm like, you need to put it on your bank.
Yeah.
And they're like, no, but I don't want to put it on the bank. I don't want anybody to know about the money. I'm like, no.
Yeah. I'm glad you brought that up because.
You don't do that. I'm sorry, but that's what
yeah.
it looks like
Yeah.
right there. It sounds
Yeah.
like a...
Bank is banditos.
Yeah.
A lot of the culture is very normal. Like, for them, having cash money is having power or power to buy.
Right.
But I explained to them, I'm like, it's not like
Yeah.
that. At least
Yeah.
not here in the United States.
Yeah.
And they're like, oh, okay.
Yeah.
You know?
I'm glad you brought that up because also it talks about planning for a mortgage. Like a lot of clients, they don't want to apply it on the front end. Maybe they're going to buy a house 2 or 3 months from now, okay? But they don't want to apply. They don't want to commit to a lender yet. They don't know who they want to use for lending, right? So we do the soft pull, okay? So that means it's not going to be a hard inquiry. We want to help educate people, talk to people about that, because if we can start talking to them a month or two beforehand, we can start letting them know, hey, go ahead and let all your paycheck deposits come in, okay? But don't commingle the cash in with that, okay? So if they have the cash, well, maybe turn that cash into money orders, pay some bills with it, pay rent, do some different things with that, because the money that's coming in is from the paychecks. That's money we can verify. So they can build up their bank account balance really quick because they're not withdrawing money. So that's that. But if we can talk to them far enough in advance, we always let them know that there's no pressure. They can use whoever they want. We want them to feel comfortable. We're really there just for a resource and let them know what's going on. So it does help. Planning is a huge thing in mortgages.
Cash can be verified with invoices or receipts.
So if cash can't be verified and it's deposited, so let's say they deposit $1,500 in cash and their balance is $1,500 because they've been paying bills and now it's all commingled. So the situation is that underwriting will say, hey, we got to take that $1,500 out. Even though it's there's been deposits from paychecks in between, and then the bank account balance is $1,500, but they had $1,500 cash. Well, basically in our computer system, it shows they have zero in the bank. So it's not even enough for earnest money. So that's what kind of hurts that cash deposit. We have to subtract it from whatever their balance is at that time. And then we don't get to use that cash. So their balance says $1,500, but our computer and underwriting is going to say they have a zero balance because we're not going to use the cash.
What if they're depositing cash from a business or something, and the transaction is cash, but they have invoices or receipts?
If they're self-employed, that works. If you have a self-employed individual, that works. But if you're not self-employed, receipts just really don't work. It's not enough paper trail to verify the cash. Yeah. So always let clients know they can turn that cash into money orders, pay bills, pay rent, stuff like that. They can build up their bank account balance really quick that way. Yeah. So we really love to have these conversations up front with clients, months in advance. So it's like, when's the best time to buy a house? Right now, like when you qualify, right? The best time is when this program is here. When, we'll take pre-qualifications that come in and we're like, I wish they would have bought a house in December because they changed from, different positions or something in their life had changed and they don't qualify. So really, planning is really huge in the mortgage industry. It might be the best time to buy now because they qualify now, yeah. So right there is, a structuring on a $250,000 FHA with a 4% assistance. They're putting up some earnest money. In this case, it'd be if they're getting seller contributions. So we're going to subtract out title policies and anything the seller's paying for, maybe survey, okay? And then the down payment assistance, $9,800. So then we've had customers come to the table with zero. So it really does work. And we can supply worksheets based on any property. So as offers are about to be made, we'll structure a worksheet, send it to you and the client so everybody knows we're all on the same page with the numbers. So if based on this structure, they're going to do their earnest money and they're going to need $1,000 to close or $2,000 to close, that we have worksheets on all this stuff. The client's seen them, and so that's part of the planning, and we can work on that. So this right here is the co-branded. Yeah. And so when they click that link at the bottom, you guys will be notified. Okay, this is your link with your information, and you'll get notified. We'll be able to follow up, and also we'll be able to track where the leads are coming. So if you're putting that out on social media or sending it, you can text it out. When you text it out, we programmed it to where on the text, you'll see the actual image. So that image is what you see on the text. So I went to a marketing seminar where they said pictures on text are so impactful. Not only is this a picture that shows up, well, I think it's only on the iPhones. I don't know if the Androids show the picture. Because when I text it to certain people, the picture pops up. And then others it doesn't. So, but it'll be a link, or it'll be that photo where they click the link, and that reaches a consumer directly. I mean, right? What is the best way for a quick response from a consumer these days? Text. You can text this link all day long. So you will generate massive business.
That photo exactly comes in their text?
Yes.
Oh, wow.
Yes. It pops up. They click the link. It takes them to the landing page. They put in their name and number, and now we're off to the races. So we've had realtors just sending out these text messages to friends, family, their sphere of influence. Do you know anyone? Check out this program. Please share it with someone. And by doing that, and that can be done with Facebook as well, people sharing the links and so forth. So there are the different DPA programs. There's forgivable ones. There's other ones that are not forgivable. Okay. We always start with a forgivable one. For some reason, sorry. Let me mute that. Okay.
Are you able to share these slides with us?
Oh, yes. I can email out to everyone. Just shoot me an email, and then I'll reply right back. Same with the photos, the headshots. We can get those built as well, the landing pages. So with some of the down payment assistance programs, we always start with the one that's the forgivable one, okay? And that's the T-Shack. They call it the Home T-Shack program. There's other T-Shack programs, so for some reason they're not qualifying. Typically when you get into like these lower credit scores and they're getting all this gift money, sometimes, because we still have to, it's an FHA loan, we have to run it through DU automated underwriting. And so we still have to run it through the automated underwriting system. And so sometimes on the lower credit score ones, because it'll go down to 620, but it doesn't guarantee that they're going to get an automated approval if 100% of their money for the house is coming from gift. Sometimes that automated underwriting wants them to put a little bit more of their own funds, or maybe have 1 or 2 months reserves. And when you get into the 640s and higher, automated underwriting is a whole lot more flexible. You typically don't need any reserves left over after closing. And you typically can get almost everything in the form of a gift from a grant like the TSHAC program. And so in some situations, it just won't get automated approved through, and that's usually the lower credit scores, or maybe their debt ratio is a little too high, past the 45 debt ratio. So then we'll put them on a different TSHAC program, and some of those programs they have to pay back. And so we'll talk to people about, okay, well, we can't get the automated approval on this one because credit score, too much gift coming in, not enough reserves. So we'll switch it to the other one, let them know, well, here's another one, but this one you would have to pay back. And so, and we just give them the option and let them know this is the situation. So if they were to sell the house in the future, that would come off their proceeds. So really, most of the time, they do qualify for the forgivable one. But it's nice to have that backup just in case, you know.
And on the one that they have to pay back, is the whole amount, just to say it was 4% and it was $8,000?
Yeah.
So when they sell the house, they need to.
They would have to pay back
their profit.
Yeah, it would pay back the whole amount and it'd come off the proceeds. Yeah.
Okay.
So I'd say majority of the time, probably what'd you say, Heidi, like 80-90% of the time, the forgivable one, and maybe 10% of the time they're not qualifying. We can.
It really depends, like some of the things, like we always try to get the borrowers approved for this one first because we want them to have the forgivable and not have to worry about paying it back. But if their score is a little bit lower, like below 640, it's generally not going to be the forgivable unless they have reserve money in the bank or something like that. But the other program is forgivable after 3 years, and most of the time people do stay in the house for 3 years. So it's not that is much easier to get approved for on the next slide. But,
Yeah.
and on that SEF question, we can do the SEF loans. The reason why we like this program is because it's easier to get an approval on through our system, and because they do have the option to not have to pay the money back for SEF. Their options are all where you have to do, like, it's like a silent second lien where you have to pay the money back. So that's kind of why we use this program the most.
It's like 2 loans, right?
Yeah.
Great. And this is the other program where it's forgivable after the 3 years.
And this loan is set up like a silent second. It's called a deferred second lien. So it has a little bit lower interest rate, easier to get qualified for, and we find like those borrowers that are at the 620, 640 range, most of the time we're not having an issue getting approved for this option.
Because it's a second lien, it's not considered gift funds. So when the automated underwriting system picks it up, it's not showing up as gift.
Yes, and
Yeah.
then, so it's ran through like that, and then they have, they don't have to make any payments on it, it's just if they refinance or sell in the first 3 years, then they have to pay it back out of the proceeds.
Yeah. Cool. So these are the rates as of today, right? Today's the 13th? Okay. So on the 3% option, it is, at the top one, it's the grant program. That's the forgivable one. They don't have to pay it back, down to a 620 credit score. 3% interest rate on a 3% assistance. The 4% assistance is a 3.25, and the 5% assistance is 3.625. So we have a lot of clients that are kind of picking that 3 and 4% option, but if they're really short on funds and they're not getting the paragraph 12, they'll pick the 5% option as well. The rate's a little bit higher, but they're able to get in a house, sooner than later, and rates are still very low. Now, about a week ago, last week, that 3% option was like a 2.875. So, it does change. We're seeing it 1/8%, plus or minus. Next week, it might be 2.875, but for now, it's 3%, which The other thing is, on regular FHA loans, there's credit score hits. So people that are in the 620, typically 620 to 659 range, there's credit score hits where the rates go up because, and sometimes there's a portion of a discount point because of the low credit score, whereas there's not credit score hits for the down payment assistance.
So the rate might even be the same.
Right, it might be the same. They might be.
You know off the top of your head, without BPA, let's just say, no credit score hit, what the rate would be on FHA?
Yeah, FHA is about 2.75 to 2.875. Yeah.
400%
Yeah.
to the rate.
Yeah. It used to be a point higher. So like if the market rate was, 3%, it was 4% on the down payment assistance. Or that would have, the 5% option would have been 4.625. And that was about a year ago. So I mean, this is a recent change as well. So
Do you foresee these rates changing this
Yes.
it's competitive with the market rates, So like, when this went up 1/8%, like all FHA loans went up 1/8%, So it's just what the mortgage-backed security bonds are doing from day to day, kind of dictate those interest rates. Yeah. Okay, so then part of this is there's a quiz.
Is this a trick question?
Yeah.
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 Is there like
There's no answer.
Don't
Yeah.
overthink it. Don't overthink it.
where's the right answer? So you can figure out.
Yeah.
Put all the five.
Yeah. So then D, yeah. Yeah, there was a D in there, but D would have been all of the above. Yeah. So that was a trick question. Very good. You guys passed the trick question. Yeah. That was funny. Yeah. I think it fell off my slide or something. So yeah, D, yeah, it's all of the above. There's 3, 4, and 5% assistance. Okay. The following lenders can be participating down payment assistance lenders.
That's easy. Just give me 100.
Okay, so what do y'all say? B. Yes, so I had to take a TSHAT course. My processors had to take TSHAT courses. Yeah, we do have to take a course, get a certification for that. Yep. B. Yeah.
That was quick.
Yeah.
That was quick. Wait till you,
Yeah. We're going to make you guys do an amortization chart for 30 years, principal and interest. No, I'm just kidding. So down payment assistance program offer affordable loans with competitive rates for first-time home buyers, free down payment assistance.
It's like choose all that apply.
Not C.
Actually,
Not C.
yeah, not C. And actually, that's a trick question. There's a D down there, and that would, if D were, what would it be? If A and B. Yeah. Very good. I don't know what happened to my D's.
Were they going down to 580 at one point, Richard? Down payment assistance?
No, just the regular FHAs. Yeah, which our regular FHAs are 600 still, but yeah. But we'll help people we'll simulate up to the 600 range. Yeah. What are the requirements of down payment assistance programs? There's no income restrictions. There are income and home price restrictions. There are credit and debt ratio requirements. So this is another trick question. If there was 2 of them, which one would it be? B and C. Yeah. Who is eligible for down payment assistance? Doctors and nurses only, firefighters and police only, everyone that meets the income requirements and debt ratio requirements. C, it's available for everyone. Yeah. And it started out as the HEROES program, and about 2.5 years ago is when it switched over. So a lot of people are still thinking out there that it's only for that one program. They still have that program, but now it's available for everyone.
So it used to be only for doctors, nurses, firefighters, and police.
Yep.
And also, ENT is also qualified.
Yeah, yeah. Does the borrower need to pay back down payment assistance money? Depends on the program, how long the buyer keeps the loan. Ask the loan officer to make sure of the details. Down payment assistance never needs to be paid back. So it would be, okay, so there would be two answers on this. So A and B, right? Yeah. Because there are some programs that have to be paid back, you know. Yeah. Yeah, most of the ones we always try for the forgiveness immediately, don't have to pay back, but sometimes they opt for the other one, qualification purposes. What kind of loan programs work with down payment assistance? All loan programs, FHA, and certain conventional loan programs. Ask your loan officer to make sure the details.
Definitely not A.
So actually you can do it on all loan programs. It works on VA, USDA, FHA. Conventional is going to be $65,000 income limits. It's harder to qualify on the conventional with the TSHAC, 65,000 income limits. Their credit scores have to be a lot higher, like in the 680 range. Okay, so but for the conventional, yeah. So conventional is an option, but we're not seeing a whole lot of conventionals because
You have to have more than that money, payment money.
yeah, and their credit scores have to be, and the debt ratio requirements and so forth. So, yeah. And the income, so it's 65,000 income versus the 97,000 income. What properties qualify for down payment assistance? All properties in Texas. All properties in Texas, however, there are certain price limits. Yep, B. What's the home price limit?
347.
Very good. Awesome.
I have it here.
Yeah.
Hold on, I have it
Yeah,
here.
that's right. Now,
349, there you go.
now before this class, what are some of the myths that y'all thought about down payment assistance before we started here? What were some of the? Go
I
ahead.
always thought that it was only for low income people.
Yeah.
Always.
Yeah.
Always. They're like,
Yeah.
no, you make a lot of money, you don't qualify.
Yeah. Yeah.
And that was my personal opinion.
Yeah.
Because, well, in the beginning, when I started real estate, when I went to school, back then, it was only for low income.
Yeah.
Or,
Right.
the first
The
responders.
HIP program, the city program, which
Yeah.
we had done those in the past too,
Or
but
the HUD homes. That
yeah,
was it.
the HUD homes. Yep. Yeah.
And that was 7 years ago, so I don't
Yeah.
know. About
Oh yeah.
I guess.
Yeah.
You can only
Yeah.
use it on people who couldn't qualify for the program.
Yeah.
Really, that was
Yeah.
not the case. Really.
Yeah. Yeah. Oh, Gene, you had a question?
Oh, no, I was just gonna say,
Yeah.
one of the things that I didn't really know about
Yeah.
was the paying it back, or if it's a bond, or what, you know what I mean?
Mhm.
So clarifying on those.
Yeah,
Yeah.
that's true. Yeah,
That
that's
really helped a
another-
lot.
Yeah.
I just found out from one of my clients, I sold their house to them 2 years ago, and they wanted to sell their house, that they still owe that back.
Wow.
We can't sell their house now.
Yeah. Yeah, because it's
It's
Yeah.
$7,000.
Right.
We couldn't,
Yeah.
like,
yeah.
find it.
Yeah.
Equity they have won't cover the.
Not enough equity. Yeah. 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 And I would say like probably
They
90.
haven't paid anything off of it, so it's
Yeah.
just like, the loan is almost as much as what we bought the house for.
Right.
If they
Right.
haven't been- yeah.
Exactly.
It's
Yeah.
only been a year and, 10 months or something like that.
Yeah. Yeah. So, cool. Any other myths that?
You have to have perfect credit.
Yeah. You have to perfect credit. Yeah. Yeah. Well, cool.
I learned that you can also use down payment assistance to help cover closing costs.
Exactly. Yeah. Because if they pick the 4 or 5% option and the 3.5% FHA, they're going to have 0.5% or 1.5% left over of the price to cover those closing costs. Yeah.
That helps.
Yeah. And when you're submitting offers, it's not part of the contract. It's not part of the pre-approval letter. Okay, so I wouldn't volunteer any information about this client's doing BPA because it's not part of the contract. We don't want the seller to think like, oh, well, are these people having a hard time qualifying? No, it's a regular FHA loan. They do qualify. They're just, instead of getting their gift from the parents, they're getting it from TSHAC. So that's the difference there.
5% with that, you can get a 5% down
Yes,
Is there a time period they have to stay in the house?
6 months.
6 months.
Yeah. Yeah, 6 months. Yeah. And I would say 90% of the time, or even higher than that, that they qualify for the forgivable one. Occasionally, with a lower credit score, we give them the option to say, well, we tried on this one, it couldn't get it automated approved, but we can try it with a second lien situation. It's not reading it as gift. It's pretty much like reading it like their own money instead of gift. So occasionally we always let the clients know, if they're going to pick that option. Yeah. How long does it take to process a close on a down payment assistance program? 90-day waiting period to close on a down payment assistance program. Normally a 30-day close. However, check with your loan officer for details. A lot of the fine print there, right? Usually can close in 2 days from start to finish.
2 days. Why can't you do that?
Yeah. It's like a lease to own with a 1-year contract. I was like, yeah. I'm sorry, but I have to say it's B. Yeah. Most of the time, it is a 30-day close. Yeah. Yeah. Most of the time, it's a 30-day close, but we're going to, as part of that planning process and communication with the client, a realtor, everyone involved with that worksheet, is because even though they're getting the down payment assistance and they could close in 30 days, and maybe they do have that earnest money saved up, but maybe they don't have that other $2,000 or $1,000 that they need at the closing table. They're still saving $6,000, $7,000, $8,000 on this program, but some people are still saving up for the $2,000 to $4,000 that they need, especially if they're not getting paragraph 12, which we're just really not seeing anymore, right? In that price range. Yeah. Is there a class or course required for down payment assistance? There's no class or course required. There's an online course. Check with your loan officer for details. Course must be 8-hour live classroom. Requires 2 years of college to qualify. So, yeah. Yeah. So they can pick a live class. Nobody ever picks a live class anymore. There is an online class that costs like $75. And it takes them like 30 minutes to do online. So that's for the consumer, getting the program. I'll hear other lenders that are not promoting the program. They're like, oh, you don't want to do that program. It's an online 8-hour class, or a class you have to go in person for 8 hours. And it's like, no, there's an online, and it can be done in like 30 minutes online. It's just simple home buying questions about buying a home that the consumer would do. So. And then we get approved.
Yay.
Yes. And funded, right? And funded. Yes. Thank you so much. Any questions? Any scenarios? Yeah.
They're loud.
Yeah. Who's going to be able to sell more real estate?
Yay.
Help more people get into homes?
Yes.
Yeah.
Question. So
Let's do away.
Yeah.
does that money ever run out?
Yeah.
I'm way down here.
Yeah. Oh, what's that?
That T-Shack,
Yes.
does that money ever run out?
We haven't seen it run out. I mean, it's just been ongoing. We don't know how long it's going to keep going for, so really it's the best time to buy is... When's the best time to buy a house? Right now, when this program is available. Yeah.
But the money can run out, right?
It's possible.
A certain amount of funds
Yeah,
allocated for it.
it's possible. Yep.
I do have a question. You as the experienced person on
Yeah.
the mortgage side, these programs are just like, how do you say, like they're run for certain time, and then one time they can be canceled later in the future?
Well, so far it's been all year round. So yeah, the program has been available like 12 months out of the year. I know sometimes USDA runs out like the last month of the year and stuff like that, but
This is depending on the government as
Always
well?
runs
Yeah,
out.
because
it's state, yeah, it's the state of Texas, right? So so far it's been year round. We've been doing this program for about 2.5 years, and it just keeps going.
going on.
Yeah, we don't know what's going to happen in the future, so definitely great time to buy a house right now.
Thank you.
Any other questions? Anything?
Richard, what I notice is like when I talk to renters, for example,
Yep.
they want to get out of renting, but they think, I just can't do it. I only have enough money to pay rent next month. I mean, for me over the years, I've been pretty successful saying, no, you don't need, it's going to cost you less money than it will cost you to pay rent next month.
Mm-hmm.
Are you seeing that at all these days where a person actually gets into a home for 100% no money out of pocket, they get all their earnest money back, they get everything? I mean, how often do you see it?
Yeah, I mean, if they pick that 5% option, I mean, that's going to cover, on a $200,000 house, that's going to cover $3,000 closing costs, right? But then you got $3,000 in prepaids. So, if they're able to get some paragraph 12 money, $3,000 or $4,000, they pick the 5% option. We've had people get in for zero.
Not these days.
Yeah. So, but typically, yeah, because of paragraph 12 is not really, it's hard to get those contracts accepted. They're kind of going to plan on probably around $2,000 for earnest money, or the 1% earnest money, $2,000, $2,500, and maybe a couple to $2,500 at closing if they're picking, like the 5% option.
So what I would say, guys, like if you do have somebody that truly has very little money, just enough for their earnest money, and that's it. When you're searching for properties for them, find those homes that have been sitting there for about 30 days, 45 days. Okay, maybe they're not marketed well. Maybe the realtor went in there with their phone and took really bad pictures. Maybe they're a little bit on the high side. Maybe they don't have the best curb appeal. But try to find a property that's been sitting there for a little while. Because when you call that person and you say, "Hey, do you have any other offers?" and they say no, there's an opportunity to get some money in paragraph 12 and truly get them into that home for zero down. No money out of pocket. So target them that way. Because if they're going after the great houses that the 10 offers are on, they're just very rarely, even if they put zero in paragraph 12, most of those folks are looking at cash and conventional 20% down deals. That's what they're looking for. So try to find them a home where it may actually work. So you know what? This home's probably not going to work because it's only been on the market 2 days and there's 10 offers. But this home has been on the market 30 days and there's no offers, and I can tell you why. It's because it's a little overpriced. And it hasn't been marketed well, and so we have some wiggle room here. Let's give it a shot.
Yeah.
It's true, though.
It's
Too bad.
Yeah.
We're
Yeah.
like, but I don't like it.
Yeah.
Yeah, but I don't like
Okay.
Yeah.
I'm like, you can do your renovations later.
Yeah,
They're like,
exactly.
"No, sorry, I want it perfect." I'm like,
Yeah.
Okay.
Oh, let me tell you, brother, she brought her daughter. She was so
Yeah.
the daughter,
Yeah.
to everybody, her mother,
Yeah.
me, everybody.
Yeah, thank you. We got, and then, yeah, thank you guys. Thank you.